The market sold off a little bit today, which was not unexpected in the sense that it's had another good run on the Dow ever since it broke out through the wedge formation. And this move right here was getting pretty close to the same magnitude as this move right here. This doesn't necessarily mean there's going to be a full-scale reversal. Just looks like we're in a consolidation stage that they should be pulling back to the T-line and seeing if it supports at that level. The NASDAQ showed more selling resolve in the sense that we had Doji, Hanging Man, Doji at this resistance level, which also coincided with the peak over here. It wouldn't be unusual to see it pull back once again, maybe back to the 50-day moving average. This doesn't mean the uptrend is over, it just means it's gotten to a more mature stage. And today the transportation index closed 15 points higher. So this is a good indication that people are not bailing out of the market. They're just taking some profits or shifting funds from one sector to the other. Knowing that there isn't any major shift in investor sentiment, recommendations recently such as CRC was based upon the big fry pan bottom and then the little J-hook pattern right here off the 50-day moving average. We're starting to move away from the T-line, so this is where we become a little bit more scrutinizing to see whether the uptrend continues, or if we see any signs of weakness, we can start taking profits with the anticipation they'll come back and test the T-line. And Cori, C-O-R-I, was another one of our recommendations based upon the fry pan bottom little J-hook pattern. But note what happened today. This is what the significance of being able to analyze investor sentiment based upon candlestick signals allow for analysis of what's happening up here. A doji, big long-legged doji, represents indecision between the bulls and the bears. We also have the simple doji rule, that it's going to move in the direction how they open after a doji. So in this case, if they open lower after a big long-legged doji, that's a pretty good indication that there's going to be profit taking. It's time to take profits. And as you can see, the T-line becomes a very critical factor for analyzing an uptrend, like Netflix. We've gone long Netflix ever since the left-right combo. Right at the 50-day moving average, the left-right combo is a powerful candlestick signal in the sense that the doji represents indecision. The bullish engulfing signal right after the doji tells you which way the decision has moved with great force. That usually starts a fairly strong uptrend. Knowing what each signal represents allows investors to move much more aggressively and knowing that they're going to be in the right positions at the right time, as well as knowing that they will be in what could prospectively be a very strong price move. We're doing trainings right now this coming weekend on which signals are the most powerful in candlestick analysis. This allows for two things. One, aggressive buying at the appropriate time, and two, it allows an investor to be trained their own discipline to know exactly what should be happening after a candlestick signal. That'll be it. We'll see you in the chat rooms.